Oh, hi everyone. Welcome to the webinar. We're going to be looking at the futures market in this webinar. Then we're going to have a little break. How long is the break, David? 5, 10 minutes? How many? 15 minutes. And then we are going to look at stocks. It's basically day trading. We're not going to look at the Forex market because we looked at that earlier on today for the London session. But if it's Forex that you want to catch up on, then that recording is up on YouTube, and if it's not up there now, it will be later on today. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading, whatever market you want to trade, carries a certain amount of risk, so please don't ever think of using money that you cannot afford to lose. It's almost, I'm not saying it's irrelevant what the charts that we're looking at, because I suppose it is in a way, because the methodology we use is volume price analysis. It doesn't matter whether it's Forex, doesn't matter if it's crypto, doesn't matter whether it's a commodity, an index, a stock, the principles are the same in volume price analysis. We look at price action, we look at the volume, and we look at candles, candle patterns, and support and resistance. The information about the concepts of EPA are up on Amazon. This is the book that started it all. There is a specialist book for cryptos, and there's also a Forex version of this book. Version in the sense that it covers the more detail about the market per se, but the concepts are absolutely identical. And what we've also done is we've put together some examples, a book of examples of the methodology, because the great thing about VPA is the signals that it gives, the anomalies that it shows, they just keep repeating. And by anomaly, what that means is where you don't have an agreement between the price action that you see, whether it's going up or down, and the volume, because it's that disconnect between the two. When the two are not in sync, that is when we have an anomaly, and that is when we know that that something is going on, and we really do need to pay attention. The best way to see it is actually on the charts. We've got I've got an example. This morning we covered the pound yen, and that's also a great example of what do you do at the moment when everything is going up. It's buy, and it's made everyone very nervous, because as I explained this morning, when markets are overextended, and they are overextended in the sense that they have been bullish for some considerable time, investors, traders, everyone gets a little bit nervous, and they think, well, is this the day when it's going to roll over? We had the FOMC yesterday. I think we've just had the GDP figures. They've just come in. I think they're better than expected. The economy is moving forward. We know there's inflation. So what do? Well, as traders, we go with the flow. We have a saying in our Forex program, it's levels and flow. Flow is volume, if you like, the activity, what is to support the price that it is going up, and the levels are become absolutely crucial, because it's the levels that will provide those pause points, because nothing goes up in a vertical line. That it always comes to a pause, goes into a congestion, and then it will decide whether it can go forward, or is it a reversal. Now that correction and pullback, sometimes that delivers a viable trading opportunity, particularly if you are on the very fast charts, and particularly if you are on tick charts or Renko charts, because you're not, yes, you are, what the overall bias is, but you're just there to snick some pips, take some points. So whilst you will be aware of the overall bias of the markets, there will be these opportunities. Some days will be better than others. Some days, trying to go short is possibly suicidal. When the Dow is steaming up 300, 400, 500 pips, it's you'd be mad. You really do have to go with the flow. But other days, when there isn't so much momentum, those opportunities, they do exist. Shares are slightly different, because whilst a lot of shares are very, very bullish, and they have been going up, there are we apply a slightly different set of criteria to shares. Anyway, Looking at the VPA, what do we have? Well, we've got volume, price, candles, patterns, and SNR, and that's really what I want to focus on in this session, not just price-based levels of support and resistance. I also want to have a look a little bit more closely at levels that are delivered, the volume levels that are delivered from the volume point of control indicator. And our volume point of control indicator is a kind of a bit of a hybrid between volume at price, and that is it's those areas on the chart where the price has transacted over a period of time. So it brings the element of time in. So the volume point of control is expressed by this yellow line. What the volume point of control, this is volume and price over time. You get the point of control or the volume point of control at the point where it has been in this area the longest. So you'll see from the histogram that it moves over to the left. Then at some point, like all things, they don't stay in congestion, they don't stay range bound, you will get a divergence, so you will get a movement either to the upside or of the downside, and the break either up or down is going to be confirmed by volume, which you see under here. This is the actual the activity, the buying and the selling, and then that's where your levels come in. Your levels, the way we calculate our levels, we have two price-based levels. One is derived from our Camarilla indicator, and the other is from just price-based. And on this is MT4, we have what we call the dynamic support and resistance. So you'll have a thicker line. Let me find one there, that one there. It's a slightly thicker line, it's solid line. So we know that that level is quite reasonably strong. Or you get a dash line, and that line is not so strong. It still holds. You will still find price will bounce off it, but if it's a stronger level, then that is always a much more it gives you a little bit more confidence. Now, with the volume point of control, as you can see here, you'll have noticed what the indicator also does. It then puts in these bands which also act as support and resistance, both at the top and the bottom. And this is where sometimes they leach slightly, they go below that, which also gives its own narrative. But let's just look at the bands where they are solid, as it were. This is resistance based off the VPOC. Now, the setting for the volume point of control, I have 80 as a look back period. You can adjust the look back. I think the default comes out at 140, but I have found 140 is a little bit, it's too much. 80 works really, really well across all the time frames. And what we do, as with all support and resistance, is we look at it in multiple time frames. So it's really important, first of all, to know where those important levels, as I said, are in the different time frames. With the Camarilla, the advantage of the Camarilla is that the levels that the indicator gives us on the hourly chart up to the daily, these are these are there for the whole week. So you get them on a Monday and you know they're going to be in play for the rest of the week, which is great, because what happens on the daily values, and we've had a great example of this morning on the pound yen. The pound yen had a really nice move higher, which you can catch up with on the YouTube video of the session this morning. And what I said was, it had actually gone, once it's gone through the daily levels, well, what do you do? Well, on the upside, you then look at the hourly, and what we have here on the hourly, and as I said this morning, my anticipation was that it would get to the R5, and it's actually got there now. So what's the next one? The next one is the R6 on the hour. But on going back the other way, because it's gone through, the levels then act as, that's where price is going to go back to. And in fact, it did. It behaved very, very well, very, very nicely, and it plonked itself back on the R6, and the pound yen is going up again. Now, we would expect the pound yen to go up, because if we look at our matrix here, now you say, well, what's this got to do with futures? Because why am I looking at the forex market for futures? Because one of the things I want to explain to you, and I'm going to also cover it in the stock market, in the stock trading webinar, is that whatever instrument you're focused on, whether you are an index or a commodity or a stock, you really have to have a broader view of what's going on in other markets. Up until last week, we were talking about, a couple of weeks ago, we talked about bond yields. Every trader and his dog is watching bond yields. Well, they never used to watch bond yields, because bond yields tell us so much about sentiment in the market and what the market is perhaps thinking moving forward. If you suddenly have yields shooting up to 2.5%, they're not going to, but if they did, then you would see a very big reaction. But you also see a huge reaction in the foreign exchange market, particularly with the yen pairs. When you see all the yen pairs all stacked up, moving higher, which means the yen is being sold off heavily, without a shadow of a doubt that markets are in a good mood. And we look at the NQ, and blow me down, it's up 151. There's a post on my site which we did yesterday before I wanted to do it for the FOMC, and just to look at the daily chart, which I've got here as well. And basically the key level is 14,000. If it holds and breaks up above 14,000, then it has a very nice platform of support, and then it's going to go higher. And again, we are, traders are going to say, oh my goodness, how much higher is this going to go? These are all-time highs, And it's ironic that when things are moving so strongly and moving higher, the overriding emotion is fear and worry. When things are going badly and they're at the bottom, and your trade has gone completely against you, the overriding emotion is one of hope. But there we are. That's just the way it is. And as so Jesse Livermore said, nothing's ever too high to buy, nothing's ever too low to sell. And as Keynes said, things can stay overextended a lot longer than you and I can stay solvent. And what we have here with the CSI, the currency strength indicator, is a perfect example. This is actually the Canadian yen. It's the strongest one of the yen pairs. It's not it has an element of the RSI in it, the CSI, but it is not a straight RSI, but it has the principles of overbought and oversold. And look, it's tried to, and it goes up and up and up. Now, eventually, of course, it's going to. And sometimes the more overextended it is, it's like an elastic band, then it will snap, basically. Now, what I've done here, I'm not going to go to NinjaTrader today. I'm actually going to stay with MT4, because futures, trying to trade futures can, it can be expensive. But you can trade them as sometimes as a CFD, but also as a synthetic instrument. And I've got a whole load of futures here. This is the NQ. Let's have a look. This is my 5 chart setup, and this is what we have here. This is the values that you see here are not going to be absolutely, this is a derivative, if you like, of the actual futures contract, if you like, but it is perfectly tradable. Most MT4 brokers will provide access to these markets, and all you have to, it's just the spread, that's it. You don't have to worry about having thousands in, it's not like trading a futures account. Now, what's interesting here is this 14,000 level, and going back to the volume point of control. This has really been this break from this level here, which is at, if I can just pull it up, let's have a look. This is the NQ. Oh, here we are, 12,900, something like that. And it hasn't, that was a very, very strong trend. You've got volume represented up here. Then it's really when it got to this 14,000, this is another all-time high. We also have a price-based resistance up here. And, it's had a little pullback. It's a reasonable amount of volume underneath it, but for that amount of volume under that candle, I would have expected that candle to be much deeper. It isn't. And what you can do is you sort of look over to the chart on the left-hand side. You kind of benchmark it. So if you like, you've got this big candle here with a reasonable amount of, you know, you look at the volume. Let's take this one here. It's a very similar situation we had here. That's right. This candle with that amount of volume, again, a kind of anomaly, and we had this, but essentially it's down to the levels. We had these kind of piano keys with the index. Then we had another attempt at 14,000, and now it's trying to move higher again. Now, what about actual price-based levels? Well, we've gone off the R3. If it's going to go higher, where is it going to go? Well, on the hourly chart, we've got this level here, which is 14,000. Let's have a look. 14.2, roughly 14.2. The third and the fourth levels are really important. If this holds across here, then this is what you would look for. You would need to look for these tests of these important levels. Look at you know, for the reversals, you need to see what the volume is under the down candles. If it's confirming the price move, then you are going to get a potential trading opportunity. But if it isn't, then this is going to go higher, and that's where it's going to go. On the daily levels, let's have a look where we are here. Right, here we are. Well, we're at the R4. What we've also got is a volatility candle. We've just had and also we've just had the open as well. So it may be possibly, you know, let it sort of calm down a little bit. The volatility candle it's all over the place at the moment. Where that closes, whether we have a wick to the top, a wick to the bottom, what will happen first of all is the price will retrace to within the spread of the candle. But getting back to levels, again, we've got the 3, we've got the 4, and then we've got the 5 where it kind of came off. It didn't quite get there. Going down right down to multiple time frames, this is much clearer cut. We've actually got a 2-bar reversal bang on a price-based level, and we've also got a volume resistance level here derived from the volume point of control. Because it's around the VPOC at the moment, that kind of tells you, you know, this is what you get at the open. No one knows realistically where this is going. All we know, the bias so far has been to the upside. You know, markets want to stay positive. You know, is there any reason could there be a technical, sometimes you get something called a technical correction where basically you get a lot of traders and investors saying, do you know what, I've had a good run, it's at an all-time high, I think I'm going to, you know, take my profits and run basically. So there's all sorts of reasons, but looking at the support and resistance, this is volume. You've got a 2-bar reversal. It's down at the volume point of control. That will also provide support as well. This is a very big candle. We can see here we've got the volatility has been triggered, a ton of volume coming in, but it is kind of distorted because it is the open. And you know, in fact, it's more of a doji. It's got the wick to the bottom of this candle here. So you can trade these markets using an MT4 platform. And to help us, if you like, remove the noise that is going on at the moment, and that is to use a Renko chart, and that really just kills it, and all you get is this geometric representation of the price action. And this is what I was trying to say about using levels, using pullbacks. We've developed these indicators specifically to help us when you have, this is what we call a primary trend higher, and every pullback is a secondary and minor trend, but you never, you know, until you start looking at the volume on the time charts and with the help of the indicators, you won't know if this is a viable reversal, a viable pullback that is possibly that you can possibly trade, or is it simply, you know, exactly what it is, a minor pullback before the primary trend is, you know, carries on higher. And really, once you capture a move like that, knowing that the open is coming along, personally, I would say, look, you know, just come out, and wait until the market calms and all the kind of volatility dies down. And we know there's volatility because the volatility indicator is triggered. This is these little purple arrows here. On the daily chart, what we also have to be aware of, that is a narrow spread candle. We don't know what the volume that's going to go in under there. Reversals at tops will happen for a number of reasons, and it's explained in the volume book and it's explained in our Forex program. What you need to see is you need to see these anomalies. You either need to see massive volatility, a lot of racking about, or what you have to see, what you can see as well, is you have a lot of narrow spread candles with tons of volume going in, and effort and result are not in agreement. So prices are trying to go higher. There's a lot of effort going in, and there is no result. It can be quite nuanced. And what really, did it for us when we looked at it is you look at the volume underneath and the volume candles. They're kind of in agreement, and if they're in agreement, there isn't that anomaly. If that volume candle was up here, under that, that volume bar was up there under that candle, then you would say, there's something not right. And again, not off one candle. You see a number of those, and that is a really big clue that you need to look at. Or you see prices going up, volume actually falling, and you say, well, you've got this very nice example here. Up it goes here, and the volume is falling away. So you kind of know. So there's 2 or 3 ways that VPA can tell you whether you are going to see a pullback or a reversal. And as I said, then you've got the price-based levels, and we've also got a level from our VPOC here. If this carries on, and can also happen at all-time highs is you will get a period of congestion as the market, because we're coming into May, it's the end of the month, sell in May and go away. You've heard all those, all those old sayings. So markets say, well, we don't really know what's going on, and so they'll just congest, and volume will be kind of okay, and you will get this very long congestion phase. And you simply have to wait. And then what happens is, if this volume point of control goes up, it's very small at the moment compared with this, it's going to have to be in this area for a long time. But supposing this did stay in congestion, and it is perfectly feasible over a period of time. We had that a couple of years ago when it was weeks and weeks and weeks in congestion. Then you simply have to be patient, and it makes day trading particularly difficult. Now, when you look at the weekly chart, again, we're at this key level. There's a reasonable amount of volume going in. That's on the up candles. They're kind of narrowing. This is a very interesting candle because it's a down candle, but with a ton of volume underneath it, and that's telling us that there is buying under that candle. There is price support under that candle. So learning to read the candles individually and as in a group of candles will tell you an awful lot, but you do need to look at them in multiple time frames, and you do need to look at them in multiple time and in groups, basically, not just a one-on-one. Now, what else I've brought up here, talking about commodity, let's move up to over to commodities. I've actually pulled up wheat because this is those of you who know, we had the FOMC yesterday. Now, the FOMC is something that all Forex traders pay attention to. I don't know if index traders pay attention to it, but you really, really should, because now it's all about what's the Fed doing? And it's the Fed seems to be quite happy to allow inflation. They're going to let it overshoot from their 2% target, as it were. But what's been going on in commodities for some considerable time? This is the wheat chart, and they've actually been moving higher. This is from March this year, where it's been really, wheat has been on a bit of a tear. And you have to understand what the Fed mean by inflation and what you and I mean by inflation are two very separate things. Food prices will go up. They will be going up quite strongly. We only have to look at what the wheat price is doing, what soybeans are doing, what you know, all the soft commodities are doing. They're not necessarily calculated in what the Fed consider to be inflationary. And David and I personally think that there is going to be some serious conflict about that. Do you think so, David? And also because of what has happened with the virus and all sorts of other things, there may even be shortages. So, you know, it's not going to be a good time moving forward. Not yet. We're talking about much later this year and certainly next year. But again, this is what you see in a trend. So again, we had the move lower off this big hammer candle, again off a very significant volume support level. Big wick to the bottom of that candle, tons of volume under there. We know there's buying under there. There has to be. You don't have a wick that deep and no buying. Up it goes, up it goes. But look at the volume. The volume then starts falling away. Then you get this sort of really moving into a range, moving sideways. And now we have, this is what I'm saying, you have to be patient. After a period of congestion and consolidation around the VPOC, it's where the market is transacting. You know, there's no divergence, there's no firm, you know, they haven't decided which way they want to take it. So basically up it goes, and again your levels come up. Again, it's the volume. You can look back over to the left of the chart. Is it a significant level? Is it one where it's come off before? It has come off. You had two candles here, lower volume on a bigger candle under here. Then you had this little squishy squashy candle, ton of volume underneath it. What is that telling you? That is an anomaly. If that was selling, that candle would be much wider, much deeper under that kind of volume. It also hit, again, a volume support from the VPOC and up it. Where's it going? Well, it's clear where it's going. It's going to retest that high and so on and so on. And if you're down at the faster time, this is wheat, but we really could be talking about anything here. Again, we have, you know, you can see the primary trends, the pullbacks, the consolidations, you can see them much more clearly in the Renko chart. And, you know, you would use the Renko chart in conjunction with the time chart for your entries. And again, you would use the VPOC. So that's that one. Soybean is pretty much the same. I'm going to pass over to David because he's got copper. Copper is really, really interesting. Yeah, copper. Let's have a look at soya. Again, really nice run higher. Spreads narrowing. A volume rising, spreads narrowing. Then you had this, in fact, it's a 2-bar reversal. In fact, sorry, you can't see it above here. There's actually a massive shooting star up there. That's actually got a wick to that candle because, you know, if that candle, that would be buying, but it's actually a huge wick and down it goes. We've got a doji candle. Doji is great two-way price action on the shorter time frames, but it's in indecision. So it could be another pullback in soya. But as I said, it doesn't really matter whether it's soya. The principles are identical. If you've got any questions, just drop them into the chat box. I will pass you over to David. Is it, are you going to do copper, David? I don't know.
Yeah, I'll just cram them in.
Okay, fine. Yeah, fine. Sorry. Oh, sorry about that.
Hi, everybody. Just drop that out of the way. Hopefully you can hear me. Hopefully you can see my screen. Just a quick update from this morning. And it is really all about sentiment. This figure down here, if you're with us this morning, I think it was about 10.52, something like that. We're now up 10.72, so we put on another couple of hundred pips on that, which is very nice. Going to leave that on. Hopefully the market sentiment will continue. Just wanted to show you a quick whiz round where we are. Let's. I've got the silver here. I'll come back to that in a moment. Let's just have a quick look and see what the indices are doing per se. There we are. Usual volatility at the open. YM, NQ, and ES along the bottom. 5-minute time frames along the top. But essentially, you know, we're looking for this breakout here from the ES on the daily. All looking fairly bullish. But as I say, as usual, the volatility traps all over the place. At the start, which is what you expect to see. So there's nothing particularly new there. Big surge in volume. What I wanted to show you was this on silver. I've got copper up there as well. I've also got gold. Terrific price waterfall on silver on the 5-minute. I mean, it's just classic what you want to see. Widening spreads has come off the, you've got resistance here, you've got, it's building into congestion phase, then the price waterfall starts, crashes through here, through these low volume nodes, which is what you expect to see. All this low volume here is taken out in 3 candles. And then, of course, you get down onto the volume point of control. And what are you seeing in terms of volume? Just classical, rising volume. We see some buying coming in here. It's not going to stop it, though. Then we see an absolute ton of volume coming here. This is the heaviest volume so far. Probably going to see some more congestion. Why? Because we're at the volume point of control. If we break away from the volume point of control, then clearly we're going to see more downside. Trend monitor's transition, it's gone straight through from blue to red. It's just a really classic example of a price waterfall, development of a price waterfall, and what you expect to see. And the other important factor here is this area here on the volume point of control. When you go through, it's exactly the same as going through price-based resistance or price-based support in this case. Is the volume going to act as support? No, there isn't enough of it there, and you expect the price to move through there pretty quickly because it doesn't require a lot of effort. There's no congested orders sitting in that area, etc., etc., etc. So I just wanted to show you that. I've got exactly the same on gold, and of course you've got it on different time frames as well. This is on the 10-minute, and using multiple time frames, it just gives you a completely different perspective. We've got nice buying coming in there, got a hammer there. It's starting to slow down. That fall, that rapid momentum that a price waterfall gathers, it really takes some effort to stop that. So, the analogy we've used over years and years of trading is of an oil tanker. If you turn the engines off an oil tanker, it will carry on for many, many miles under its own momentum. And it's exactly the same here. And stopping a leviathan such as that is exactly the same as trying to stop a market that's falling with mass volume being sold into it. It just takes a huge amount of buying to actually reverse and accumulate all that heavy selling pressure. So don't expect it to happen in one candle. Generally speaking, what you see is you'll see a big price waterfall, then you're going to congestion for some time with what we call the mopping up phase, and then out the other side. Same on gold. Gold is, it's really struggling. Anna talked about inflation. That's going to be the one big driver. If we get this super cycle in commodities, which certainly is shaping up that way, that is going to help, and it should drive gold, and gold should go through 2000 and way beyond in the medium to longer term. But that's what's happening with gold at the moment. It's really struggling on the daily. But a similar sort of picture in terms of, intraday, that's what we had. So when you're trading, if you're trading gold or you're trading silver or vice versa, you've always got to look at the related markets, not just, not just the dollar, but look at what's going on in terms of gold if you're trading silver and vice versa, as I say, because it'll give you so much information. Let's just go up to copper. That's been on a real tear. Up onto the copper chart. There we go. That's the daily chart for copper. It's been on a tear. It's getting up to this top level here, as Anna mentioned. It might well have some congestion start to build here. We'll see how the volume shapes up today. There's certainly some buying came in yesterday, support it. There's a little bit of a wick to the upside there. No great surprise given the strength of that particular trend on copper. Can you trade it to the short side? Of course. That's on the 5-minute. Absolutely no problem. And when you look at it from an intraday perspective, again, it's all down to VPA. You look at this rally in here. If you're short this market and you see a rally like that, what are you seeing? You're seeing volume falling away. Is it anomalous? Short answer, yes. Why? Because the price is rising and the volume's falling. So it's hardly likely that rally is going to go up here somewhere. It's more likely to roll over because it's not sustained with rising volume. You've got to remember that for a rising market, you want to see rising volume, and in a falling market, you want to see rising volume as well, because they both take effort to move. Bit more weakness here, tried to rally, not really going anywhere, more to the downside to come. But if you're holding this longer term, you might just see this as a reaction intraday. You're not really too bothered about it because you're sitting on this longer term. It's like the positions I've got over there on the little tiddly account. There's some dollar buying coming back into the market now, maybe some yen buying. Is it enough to worry me particularly? No, not at the moment. So you just sit tight and wait, and you just play it accordingly. Still carrying on down. It's on 15 seconds. Nice move. So here we are. We're trading short against a market that is predominantly bullish for the time being, certainly longer term. But the principles are exactly the same. Trend monitor, multiple time frames. Trend monitors red in pretty much all of them. down as far as the daily, which is very strongly bullish, as you would expect. This is down to 10 minutes. So we've seen that transitional effect of trend monitor turning red right the way throughout the time frames down on to the 10-minute time horizon. And it's just the way we urge all our customers to use the trend monitor. If you're using it with the trend dots, if you're not using it with the trend dots, it doesn't matter. Use it in multiple time frames. The first change will happen up here on your fastest time frame, and gradually, if it's a real change in trend intraday, then you will see it develop, and you're seeing exactly that here. You're seeing it move through and across the time frames. Got a volatility trigger here. Nothing over on 3-minute, nothing over on the 5-minute. So in terms of importance, it's not that important, but it's there. It just flagged it up. We're going lower, looks like it at the moment, carry on lower. So that's where we are with copper. Just go back onto silver again, see if that's done anything yet. No, that looks as though it's carrying on down as well. Yep, that's dropping away too. So that little effort to move up there wasn't enough. We're now breaking further down. Again, trend monitor's keeping you in bright red, a little bit of fluctuation here, but nothing to worry about. You know, there's no change. There's no even, you know, in these areas here, which are so key, there's absolutely nothing. There's no flicker of a change on the trend monitor there. Nothing here either. You know, it's just saying, look, it's still bearish. It's still bearish. Just sit tight and wait. Just see if the same's going on with gold. Just keep an eye on the clock. There we go. Gold similar into the VPOC, now starting to break away. And as you break away from the VPOC, what you're looking for is, you know, what's below. Well, there's very light volume here. You'd go up onto the 15-minute. 30-minute, just see where the next levels were in terms of volume on the histogram and what was like to come into play, and of course also the price, the levels on the accumulation distribution indicator as well. Let's just get a quick fix on the futures. See where they're going. NQ's down, turned over, and YM is trying to rally. That's, you probably can't see that little wick there, but it's gone up to about 14,050 and it's come right the way back down again. So it's not looking terribly strong at the moment. That's despite the you know, fantastic stellar results for Apple and yeah, and others, no doubt. And I've got Apple up on one of the stock charts. I'll cover that in the next one. So there we go. That's just a quick whiz around what is going on at the moment in terms of the futures. Oh, one final is let's a quick look at softs. Where are we? There we go. Again, softs have been on a real tear, bit of weakness coming in. And again, you know, you may be an intraday trader, but when you look at daily charts like that and you see, you know, price action like that, what is that telling you? Well, it's telling you there's weakness ahead. Lots of volume, big wick to the upper body, you know, and selling off. No great surprise after this lot that we're seeing some weakness come in. Is it enough to reverse reverse that particular trend? Probably not. It's just indicative of profit taking. Again, exactly the same thing here. Big wick and lots of volume coming in. Is that weak or strong? It's weak for sure. And the same in terms of, this is wheat, even bigger wick there. Lots of volume. You know, the market's rolled. Now what you want to see is support coming in. If that bullish trend is going to continue, you want to see the buyers coming in on the daily basis. But from an intraday perspective, when you look at the daily chart, it gives you tells as to what is potentially the flavor of the price action that you can expect as an intraday trader based off of what has actually happened on the daily chart. There we are. So let's just go back to our multiple time frames. This is the YM, 15-second, 1-minute, 3-minute, 5-minute, 10-minute, and 15-minute. So very much intraday. Still trading around. This is the volatility candle we had at the open. Lots of volume. We're trading around inside that spread of that candle for the time being. It's what we expect to see. You've got the VPOC, the yellow line, which is the fulcrum of the market. It's is evidence on every single chart there. So for the time being, we have to be patient. We have to wait. What we're looking for is volume and price action to break away from there, and then, you know, jump into a trend as it starts to develop. What's interesting about the volume here is we've got price falling, but we've also got volume falling. So that tends to suggest that the selling pressure to the downside is waning, And therefore what we're waiting for is now is potentially a move to the upside, but you've got to wait, be patient, set your levels up, go to the chart, look at the levels. You know, what have we got here? What have we got in the way? Well, we've got price-based resistance, pretty strong price-based resistance here on the accumulation distribution indicator. If we get up to this sort of level, you know, the volume falls away dramatically, and that's what you're looking for the whole time. Let's have a look on 3 very quickly, see what that's like. That's going to hit the volume point of control itself if it starts to rally, so you've got to be aware of that. So maybe you go this level here, looking at potentially above this price level, through this volume level here, maybe you clear away once you get up to this level because you've got low volume on upwards through that one. That's it. We're going to have to run because we've got next webinar coming up. So we see you in a couple of minutes time. Thanks very much indeed for watching. Hope you've enjoyed this one, and we will see you again soon. Bye for now.